If you're thinking about buying a home, one of the first questions you might be asking is, how much should I save for a down payment? And another related question that comes up often is, what is earnest money and how does it play a role in buying a house? Today I'm going to break both of these down for you. I'm Elise Fay with the Seabach team, and I've been a realtor in the Northwest Valley for over 20 years. I've sold over $200 million worth of properties, and here's how I can help you too. Let's start with how much you should save for a down payment. The traditional advice is save 20% of the home's purchase price for a down payment. So for a $300,000 home, that would be $60,000. But here's the good news. These days, you don't necessarily need 20% down to buy a home. There are plenty of loan options that allow for much smaller down payments. For example, if you qualify for an FHA loan, you could put down as little as 3.5%. Some conventional loans offer down payments as low as 3%. And if you're a veteran or an active duty military, a VA loan can get you into a home with zero down payment. So while 20% is a great goal, you can still buy a home with far less. Just know that a smaller down payment may mean paying for private mortgage insurance, or PMI, until you've built up enough equity. Private mortgage insurance is an extra monthly cost that lenders require when you put down less than 20%. It protects the lender in case someone defaults on their loan. Now let's talk about earnest money. Earnest money is different from your down payment, but it's another important cost to be aware of when you're saving to buy a home. Earnest money is essentially a deposit you put down when you make an offer on a house to show the seller that you're serious. It's usually around 1% of the purchase price and is held in escrow while you go through the process of inspections, appraisals, and finalizing your loan. The important thing to remember about earnest money is that it's part of the deal. If everything goes smoothly and the sale goes through, the earnest money is applied towards your down payment or closing costs. But if you back out of the deal for reasons not covered by contingencies, the seller could keep your earnest money. Earnest money shows you're serious up front, and your down payment is what you pay when it's time to officially buy the home. So to recap, while 20% is ideal for a down payment, there are plenty of options that let you buy a home with less. And don't forget to budget for earnest money, which is a deposit to show you're serious and will eventually go toward your total costs. So if you're thinking about buying a home in the Northwest Valley of Arizona or just want to explore your options, feel free to reach out. I'm always here to help guide you through the process and answer any questions you have. Call or text me anytime. I'd love to help you make the next move towards home ownership.